Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets. As always, we're brought to you by WooX. Links available in the description below. If you want to try out the zero fee trading for 2 weeks, sign up with that link and deposits over $100, you can try out that feature. I would also urge you before doing that to read the long form article about Woo, and also on the website there is a nice execution analytics dashboard. You can pick spot, futures, whatever assets you trade, different sizes, and then compare the overall cost of trading on Woo versus other venues. For further details, you can click on the fee methodology, which tells you how it calculates these things, what fee tiers it's comparing, and all that type of good stuff. So if that's of any interest, check it out. In general, I think it's a good idea to spread your counterparty risk even among centralized exchanges. I do that. I think in general it makes sense to do so, but I'm sure you know all of that by now. But thank you to them for supporting the show. So headline of the day is that the SEC is suing Binance for breaking securities rules. The market obviously dumped as a result. There was actually a lot of aggressive selling before the news came out, presumably from insiders or people privy to that information. You can kind of see the open interest was ramping up on the perps even before the news came out, and the market was absorbing it at first and then started to roll over, obviously, as soon as the release happened. But you can see that OI started ramping before the actual announcement. So those are efficient markets that work for you, or inefficient. So it depends on your philosophy. In any case, we are left with technicals that are changing. On the monthly time frame, if we do our high time frame overview, not a lot has changed yet. It's kind of just moving lower. The monthly close was a bit of a nothing burger, and we're sort of 5 days into this month, so I'm not going to read into it too much. The higher time frame levels, as always, you all know the routine by now, remain the same, where 35k is resistance, and the pre-breakdown cluster area is sort of 24 to 20-ish is monthly support, and we can always narrow that down on the slightly lower time frames, but bigger picture monthly, those are the levels that matter. Okay, so on the weekly, this is the time frame that's been sort of shifting. The weekly and the daily are useful, and we'll talk about the intraday as well. On the weekly, the argument for some time was essentially that we've had no weekly close below the low of this range, and the longer this lasts, the more it favors bulls because the market is failing to break down. At the moment, it is more successful in that. I think we need to wait for the weekly close, especially given this thing happened on Monday, to be sure, but there's never any certainty in markets. At the moment, it's certainly trying to break down, and the success or lack thereof of this impulse will kind of set our bias for the days and potentially weeks to come. But for the time being, it's breaking below everything, so until it reclaims something, I'm not interested in this thing. I think we were willing on the daily time frame to give it a chance, which we'll discuss shortly, but had to abandon ship on that idea, and that ended up being a good decision. So on the weekly, levels aside, just in terms of how market structure is developing, it doesn't look terribly constructive at the moment. If we take the candle closes, you've got a high, low, lower high, lower low, lower high, and now it's sort of breaking below the consolidation, potentially forming a lower low. Again, if you want to be a purist, you need to wait for the weekly to close and to make that view obvious. But this is, you can just kind of draw a line through it. A weekly downtrending structure with lower highs and lower lows ever since 30k. So in general, if I want to buy something, right? I want to buy something. There are three criteria that it needs to meet. Not all at once, but at least one of these. Spike something, hit something, reclaim something. Okay? In a nutshell, in terms of mental categories for bullish setups, spike something, hit something, reclaim something. So looking on the weekly time frame, how would any of these be satisfied? So in terms of spike something, I think the earliest argument that one could make would be a failure to break down from these lows, and especially because it's not just a poke below the lows, we have strong news flows pushing this. So if the market shrugs it off, not only is it a failed breakdown on the higher time frames, but it's also relative strength in the face of pretty bad news, and that would all be quite welcome. And so if we take this as our low, and this kind of double bottom looking thing on the weekly, if we get a weekly close above those lows, and that would cascade onto other lower time frames showing a failed breakdown, then it would meet the spike something rule, and we can look for failed breakdown longs higher. Okay, hit something would mean hitting a level of weekly support. I think the earliest version of that is 24k, and all the way down to the other kind of this cluster, essentially the other side of it, at 22k. So for setup 1, it needs to spike and reverse on the weekly or on the daily. For if it's going to be route number 2, it needs to hit something, which is sort of 22 to 24. And if it's setup 3, which is reclaim something, it would either have to be a sort of derivative of the spike setup, so kind of spiking on the weekly and then reclaiming something on lower timeframes. Because on the weekly, honestly, there's not a lot of structure in the mid-20s, and I'm a huge fan of, okay? But generally, these 3 principles are, how I'm looking at this thing. Now, on the daily, if we extrapolate that and look at the same thing, in terms of spike something, you can see our weekly level also makes for a nice daily double bottom here. So some sort of failed breakdown there would be welcome. Hit something, to nobody's surprise, the daily levels also overlap with the weekly, with 22 and 24. We could also just add a midpoint to this if we wanted to and start getting somewhat granular with it. But for the time being, given that's not where the market is trading, that's slightly unnecessary. But, there are closer to 20k, some decent levels that could meet this requirement. And in terms of reclaim something on the daily, the reason I'm unsure about this is because the daily time frame has been really, really choppy. Even bearing in mind, whether you want to use this cluster, as we discussed, or I think on the last Monday markets, whether it's this level. I mean, thankfully, this provided a very nice kind of exit opportunity if you did take that punt. I didn't, because when I was looking at this, the market was essentially here on the 4-hour. It had already fallen back into the range, so no long setups were available. Missed out, I guess, in hindsight, of course, on a beautiful short on the same side, but whatever, that doesn't really matter too much. So with all of that in mind, on the daily time frame, the whole kind of reclaim something, I'm not entirely sure where that would take place. I think it'd have to be on the slightly lower time frames, on the 4-hour, as we'll discuss, or at the very least, if we give some weight to recent price action, we could mark out something of this nature, basically the pre-breakdown range at sort of 26.7 and 27.4, and essentially say this is our consolidation. Broke down, didn't go anywhere, broke up, didn't go anywhere, acted as support resistance in the middle, and now it broke down again. So if it wants to meet the reclaim something argument, it would have to at the very least close back within the range low, or ideally above the range high, and then that would be a bullish signal. But for the time being, if you just look at this daily time frame, it doesn't quite satisfy any of those principles that I outlined. Spike something, we have a move below but no spike yet. Hit something, hasn't hit anything. Reclaim something, we know that the reclaim levels are slightly higher, so just looking at this, I'm happy to wait. Now the 4-hour has been quite useful. As mentioned, I had this really nice setup failure play out. I got at least one DM telling me that they caught it off of this, obviously trading better than I am, which is not a difficult thing to achieve nowadays. Nonetheless, going down to the 4-hour to try to see how those principles overlap, I still think the same 4-hour range is helpful between sort of 26.4 and 27.4, not least because of how sort of accommodating the market has been in terms of using these levels as support and resistance. So first principles from here is I will treat this as a breakdown until proven otherwise. There are 2 steps to proving otherwise. First is the spike and reverse. So if this kind of double bottomy thing, the market wants to step in and soak this up, getting 4-hour and daily closes above it would be a good sign. And then maybe there's a short-term risk-defined long higher from there. Ideally, with a slightly higher conviction and just, I think, a higher probability setup, I'd want to see this breakdown, however low it goes, fail and make progress back above 26.3, 26.4, and then sort of mid, high, and then maybe higher if the market's going up. But again, these are all by definition counterfactual, because what we currently have in terms of recent price action is failed breakout, retest of the range high, bad news, and the market collapses. So that's bearish, right? That just looks weak. There's no high time frame support that makes me think otherwise. So the market has to prove it to me. It either has to reach those high time frame support levels that are lower, or it needs to mitigate and nullify this breakdown view by at least trading above the double bottom, trapping these participants, or with more conviction, reclaiming the range low, and then we can say, well, look, this was the low, then it reclaimed, and now it just looks strong, and we're back inside the range, whoop-de-doo-dah. But at the time of recording this, it's just a breakdown. I think even if you want to be an early bull, I think it makes sense to wait to see buyers step in on this spike. See if the gentlemen trading and shorting down here get squeezed, and then you can start to build a case that, double bottom spike, range reclaim, the daily looks better, so on and so forth. But at the moment, I've no strong interest in stepping in front of this thing until it shows me at least the minimum signs of life. Okay. As far as ETH/USD goes, nothing too dissimilar there. The prevailing theme on this thing has been the failed breakout at sort of 1.9k, as you'll recall, and the market's done very little to invalidate that. In terms of market structure, it doesn't look quite as disastrous as BTC because its arse hasn't fallen out yet, and that's of course a technical term. BTC making lower lows on the daily time frame, ETH hasn't quite yet. This could be lag first and foremost, so that's worth bearing in mind. And the second point is I don't particularly care that it hasn't made a lower low yet, because these aren't levels, apart from maybe very short-term trading, which I haven't been doing actively recently, that I want to be playing for bounces. And in any case, if BTC is going to unravel further, I don't see ETH USD, saving the market on its own, so to speak. So if you wanted to, I'm sure the sort of range that I would transfix on this thing would be maybe on something recent on the 4 hour, given that we're moving quite a bit, sort of 1.7-ish to the highs at 1.8. I know that looks a bit sort of convoluted, but I do think it's quite reasonable, given this was the range before the move that went nowhere, and we're currently sort of trading at the midpoint there. But sort of bigger picture, you can kind of see where we're coming from. You have a long period of consolidation. You had one fake out, second fake out, built a new range here, and now we've fallen. This looks like a sad face, just very suitable. And now we're falling back into this range. So if you wanted to, you could just develop a very simple view of this market, that it's a tale of two ranges. This is the hourly one we've fallen back into, and then there's a different hourly one above us that we've fallen out from. And then you apply your normal range trading principles from there, ideally with some confluence on the BTC side as well. But honestly, I'm slightly less interested in ETH than BTC. Yes, I completely concede that structurally you could make the argument that it looks stronger. I still think BTC has the clearer levels, and that's sort of why I've spent a bit more time there. Now, ETH BTC is curious because the relative strength on a day like this, and this entire trend has been a bit mad. Like this entire move is very strong, but I'm not a fan of ETH BTC longs or just ETH USD longs if I'm not getting setups in BTC USD outside of very short lower time frame stuff. Even on the weekly, hasn't really reached any of the levels that we've been speaking about at length. It's certainly hit, if you will, local support, the pre-breakout level at 1.7-ish. If you want a short-term punt from there, I think that's completely reasonable. But bigger picture, unless the weekly failed breakout idea gets fixed, we're still stuck with the fact that if you're being charitable, the first weekly support is at 1600 if you get a larger move. If you're being less charitable and taking a bigger range, the first weekly support is at 1500. So as long as we're still in this structure, basically, dealing with the pre-breakout range as resistance, I don't see a particularly nothing for my appetite, so to speak. And again, I think even on Monday markets, we spoke about this 1910-ish daily resistance level, and the market hasn't really done that. So I think if you wanted to take a slightly higher time frame range and not the hourly one that I pointed out, I would have the 19 daily as your resistance, the lowest close of this consolidation as your support at around 1790, and then if you wanted to, you could also just add a midpoint to this thing and get some context that way. So pick your poison in terms of ranges, levels, timeframes, etc. But again, no super strong evidence at the moment that I want to be stepping in front of this thing until the market shows otherwise. But I do think, I even prefer this to my 1 hour, double range idea. This seems a bit clearer to me, and it'll be a good roadmap going forward. I'm not allergic to the idea of playing a bounce towards the mid if the market gives it, so we'll have to see how that unfolds. Alts obviously getting wrecked. It didn't help that in this lawsuit they named a bunch of altcoins as being securities, and I'm sure there's going to be a whole legal and jurisdictional battle and all this type of stuff. If you were stink bidding things, maybe you got some bids filled on those, and it wouldn't be terribly surprising to see some mean reversion among some of the stronger names. It's probably worth looking at stuff that's greener or less red than other alts if you're going to make a relative strength play. But I kind of was risk off on alts in general when meme coins and everything like that started happening, and even altcoin Thursdays last time we did it was a pretty bearish one. So maybe some of these have reached interesting levels as a result of this breakdown, but nothing that's sort of immediately on my radar. If you want an episode of Altcoin Thursdays, I'll leave a comment and I'll be happy to consider that if the market looks appropriate. But for the time being, I think BTC and ETH deserve our focus, especially given that this could potentially be a shift from low volatility to high volatility. And if this is the direction that the market is picking, then we've got our work cut out for us in the majors, let alone altcoins. But broadly speaking, those are the ideas. pairs. BTC, the focus on this week is at the very least to see if the double bottom is going to be a spike, and then make progress by reclaiming the 4-hour range if the market's going to be strong. Okay, so there's the obstacles. If it just keeps going lower, that's fine. I'm not going to knife catch it here. I'm going to defer back to the weekly time frame of 24 to 22k to see, to see what the market does, frankly. A reaction, a bounce, context, all that has to come from weekly levels, which we've been starved of for some time. So that's the focus for BTC. If you're going to fail to break down, you have to do so pretty quickly. If not, I'll see you lower at support. For ETH, I'm not particularly enthralled by the ETH BTC strength. Market structure slightly different because it hasn't fully broken down. Is it strength? Is it lag? Doesn't really matter. I think there's a nice daily / 4-hour range to work with between 1.8 and 1.9. And in terms of altcoins, some mean reversion is probably reasonable, especially for the ones that have probably overreacted to this news. But I don't like punting altcoins without a BTC and ETH directional bias. So probably something to speak about at more length for Altcoin Thursdays, if you prefer. The final bit that's kind of at the back of my mind is all of this is happening in the context of Legacy actually being very strong. On the weekly S&P kind of climbing towards 4,300, which we know is monthly resistance. These have been the past, certainly the last 2 weeks on the S&P have been breakout weeks. Same with the Nasdaq. Last 3 weeks have been breakout weeks, and last 3 weeks of crypto have just been sort of lower highs and lower lows. So if this is what the market looks like when the S&P has been and risk indices have been strong, if they hit monthly resistance in reverse, I don't think that would bode particularly well for us. So I think generally, regime-wise, I still think it makes sense to be in short-term trading mode as opposed to anything more fancy than that, or trend longs or trend swings, whatever it may be. Okay, that's all from me. Hopefully that made sense. Leave a comment if you want the Altcoin Thursdays episode, or just feedback on this generally. Some people said that I sounded a bit rushed in last week's episodes. I've tried to take my time more in this one. I would really appreciate your feedback on that. As always, shout out to WooX for supporting the show, making it possible, so on and so forth. If you want to try them out, or at least use the tools that are available, such as the execution dashboard, links in the description below. Please read the article before you do so. And that's all from me. See you for the newsletter tomorrow at trletter.com. Bye-bye.